The power of compound interest is a financial concept that transforms small investments into substantial wealth over time. It's an amazing phenomenon that enables you to achieve your financial goals more quickly than you would otherwise think possible. To harness the power of compounding, it's essential to invest consistently and begin saving early. Achieving this requires patience and discipline. Avoiding unnecessary withdrawals and reinvesting dividends also helps. It's a snowball effect. Compounding is the process of earning interest on your savings or investment. It is an important tool for maximizing your wealth and reaching long-term financial goals. It can also help mitigate some of the risks of wealth erosion. However, you need to be aware of how compounding works in order to maximize its power and avoid the pitfalls. The snowball effect is an example of the principle of compounding. It shows how small actions can add up to big results over time. This is especially true in investing, where the effects of compounding are exponential. For example, if you put $1,000 in an account that earns 8% interest, the balance will be $1,080. The following year, the interest will be earned on the initial investment as well as the total balance of the previous year. The result will be that the amount of the interest will continue to grow each year. Another way to use the snowball effect is by reinvesting your earnings. This will increase the rate of growth and help you achieve your financial goals faster. This strategy is best used with investments that have a high return. For example, it can be used with savings accounts and certificates of deposit. However, you should note that the income from these investments is taxable unless they are in a tax-sheltered account. A key factor in compounding is the duration of your investment. For instance, if you invest in an asset that compounds on an annual basis and then withdraw your funds before the year ends, your investment will never have a chance to grow. In addition, the longer your investment is in the market, the more it will grow. Ideally, you should save in an account that compounds interest on a daily or monthly basis. This will give you the greatest potential for growth. In addition, you should try to make as many contributions as possible throughout the year. Another way to use the snowball effect is to invest in businesses that pay dividends. These businesses will continue to generate income and will also be able to increase their dividends over time. For example, the businesses Warren Buffett owns are great examples of this. They have strong competitive advantages and solid track records of increasing their dividends over time. It's a long-term strategy. The power of compounding is a powerful tool that can help you achieve your long-term financial goals. However, it takes time and consistency to make significant returns on your investments. For best results, it is important to start investing as early as possible and to continue to invest regularly. To maximize the benefits of compounding, it is also important to keep your investment portfolio diversified and to avoid excessive risk. Compound interest works by multiplying the principal of a deposit or loan with accumulated interest. This allows the principal to grow faster than simple interest, which only earns on the initial deposit or debt balance. It is the key to the snowball effect and can be used to create wealth over a lifetime. However, it can also work against you, as in the case of credit card debt that accumulates with each payment. For example, if you invest $100 in an account with a 3% interest rate, you will earn $33 the first year. However, the amount you will earn next year will be higher because of compounding. Eventually, the interest you earn will be greater than the original amount you invested, which is how the snowball effect starts. The most effective way to capitalize on compound interest is to invest your money in an account that pays a rate of return, such as a savings account or retirement account. You can also invest in equities that pay dividends or reinvest your earnings, which will increase the growth of your money. You should be aware of the tax implications of these investments, and it is a good idea to consult with a professional to understand your investment strategy and how it will impact your tax situation. The most important thing to remember is that compounding only works over the long term. You need to be patient and commit to your savings and investment strategies. even during times of market volatility and economic uncertainty. By following these tips, you can unlock the potential of compounding and achieve your financial goals. It's a game changer. Compound interest is a powerful tool that can help you achieve your financial goals. It can be used to build wealth through savings and investments, or it can be used to pay off debt. It can also help you mitigate wealth erosion factors like inflation that reduces purchasing power. However, it's important to understand how compound interest works and how to take advantage of its benefits. To understand the power of compound interest, consider this example. If you invest $1,000 in an account that earns 5% annual interest, the interest will be applied to the initial principal as well as the accumulated interest from previous periods. This is the essence of compounding, and it is what makes it so powerful. This process can help you grow your investment exponentially over time. The key to harnessing compound interest's power is starting early and investing regularly in Satsu. Whether you are saving for retirement or saving for a new car or even just to pay off debt, the sooner you start, the better. Also, if you can, invest in high-yield savings accounts or retirement investments, such as stocks and mutual funds. This will allow your money to compound faster and can give you a significant edge over those who do not start early or invest consistently. Another way to use the power of compounding is by investing in a dividend-generating business. This can provide you with a steady stream of income while mitigating the risks of stock market volatility. The beauty of this strategy is that you can choose from a wide range of dividend-generating businesses. Some are safer, such as REITs and savings accounts, while others are more risky, such as growth stocks. Taking advantage of the power of compounding is simple, but it requires patience and consistent effort. It's also one of the best ways to debunk the myth that you need to have a lot of money to create substantial wealth. With a little patience and consistency, anyone can make their money work for them. Just remember to invest in quality businesses with solid growth prospects, and don't be afraid to diversify your portfolio. It's a powerful tool. Compound interest is a powerful tool that can help you grow your wealth and achieve your financial goals. This phenomenon is what allows your money to work for you by adding interest to the principal balance and reinvesting that interest over time, resulting in exponential growth. Whether you're saving for retirement or paying down debt, compound interest can be a game changer that helps you reach your financial goals faster. Compounding is an essential concept that investors need to understand, and the earlier you learn about it, the better. The key to leveraging the power of compounding is starting early and being consistent with your savings and investment strategies. This can be difficult during periods of market volatility or economic uncertainty, but it's important to remember that significant returns take time and are not guaranteed. The magic of compounding is that it applies to not just your initial deposit, but also to the accumulated interest from previous periods. This is what separates compounding from simple interest, and it's why it's a crucial factor in increasing your long-term wealth. The compounding formula involves 4 main variables: the initial principal amount, the interest rate, the frequency of compounding, and the duration of the investment. It's important to understand all of these factors so you can maximize your investment returns and reach your financial goals. There are many free online calculators available that can help you determine how compounding can impact your savings based on the amount of money you have to invest, the interest rate, and how long you'll allow the money to be invested. The Council for Economic Education has a great calculator that can be used to demonstrate the long-term impact of compounding, and you can find other tools by searching the web for Compound Interest Calculator. Taking advantage of the power of compounding can help you build wealth and accelerate your journey toward financial freedom. By starting early and being consistent with your investments, you can unlock the power of compounding and realize your financial dreams. For more tips and resources on how to create wealth, visit our website for a wide range of helpful information, interactive tools, and practical strategies.